You think making wealth decisions involves sales? This week, we're speaking with a global expert with regard to sales and how having integrity and purpose and discipline are great ways of dovetailing sales process into the investment process. You won't want to miss this. This is Make Better Wealth Decisions, a podcast about financial blind spots, decision making, and how the reality of higher rates, global tensions, and tariff instability impact your investments. I'm your host, John DeGuy, a portfolio manager with Design Securities in Toronto. My guest this week is Mark Hunter, the sales hunter. He is a sales coach and consultant with over 2 decades of experience. His website says that he can guide business teams to create a culture of success where both the team and the prospects thrive. He aims to turn any sales team into leaders through both motivation and actionable strategies. Mark, how are you today?
I'm doing great. Looking forward to this conversation. I think we're going to have a good time because, again, what we're talking about needed more than ever.
Yeah, we agree. All right, so let's see if we can begin. I want to ask you open-endedly, what are your views on the wealth management industry?
Well, I'll tell you what, right now, there is so much change going on because, again, you look at crypto regulation, you look at where the markets are. I was listening to a podcast this morning. Where are the best markets? And we're seeing emerging markets doing incredibly well. Because the US market, which Canada participates in a tremendous amount, has had a great run, but are we overvalued? And you look at the price of gold hitting 4,000 USD. There's so many changes. And what I find fascinating is this. When the market is good, everyone thinks they're an expert. I remember meeting a father. I can't remember what bull market we were in. But he said, "Oh, my son is such an unbelievable day trader. He's just unbelievable." Well, dude, you didn't need much skill because we were in such a bull market.
Right.
I ran into him about 2 years later when the bulls had turned to the bears.
Yeah.
I asked him, "How's your son doing?" "Oh, he got a job."
Yeah.
And the other challenge we have is AI. The democratization of information continues to overwhelm us.
Yeah.
But the problem is, what do we do with that? I think the portfolio manager is needed more than ever because you got to be able to calm the seas.
It's funny because if you look over my shoulder here, my most recent book is called Bullshift.
Yeah.
And it's about how the people in the financial services industry shift your attention to make you feel bullish. And that's one of those things. In a bull market, everyone's a genius. And then, of course, when things change, that's not so much the case. You're an expert on sales. So I want to talk to you about sales. There are some people who say sales is a calling, and others will say it's a profession. And some try to sort of split the difference by saying, well, a good salesperson is a person who professionally helps you to buy. Where do you come down on this? Well, how would you depict the business of being a salesman?
Yeah, I think sales is a lifestyle. I mean, it's not a profession. It's not a job. Yes, I've got to have certain licenses and certifications to do my job, but it's a lifestyle because what it is I'm focused on helping people. Mm-hmm. I have a line that I love to use. Sales is leadership. Leadership is sales. Show me a good salesperson. You know what? They're a good leader. Show me a good leader and they're a salesperson. Why? Because what they're doing is they're helping their clients see and achieve what they did not think was possible. I'll share this. I'll never forget sitting at my father-in-law's kitchen table, Phoenix, Arizona, probably about 20 years ago. He said, "Mark, what do you expect in your rate of return on your stocks?" I said, "Well, I look at it this way. If I can get 8.2% a year, life is pretty good. There are going to be some years that are going to exceed that. Some years." And he said, "Man, I want to achieve a 50 to 75% every year." It didn't take too long for him to literally get wiped out in the market. And why? Because he had a financial planner, but he was a reactionary person. And this is so key. More than ever right now, we have to understand what are our clients' motives. What are our clients? This is something I tell every financial planner I run into, any portfolio person. You're talking to somebody. Talk to me about your goals. And then once they get that out there, paint a picture of me, what that looks like. Paint a picture. They may be saying, "Oh, we want to be able to have an unbelievable ranch in the Rocky Mountains in Alberta, or we want to have an unbelievable place on the east coast of Miami. Fine, paint the picture. It may be simply retirement. It may be simply, but the key, we have to realize that we have to emotionally connect with our clients. If we don't emotionally connect with our clients, we will be replaced.
You've written about there being a sequence, and that is going from trust to decision psychology and then finally to discipline. So let's see if we can start at the beginning. In sales, trust is everything. And the same thing is true for wealth management. And obviously, part of why I wanted to speak to you today is because what you talk about with regard to sales is so very applicable to wealth management, as you've already pointed out. So from your perspective, what are the key behaviors or signals to help someone build genuine trust in any kind of a relationship when they make better wealth decisions?
Well, let's weave two words together, trust and integrity, because I truly believe that they play well together. Here's what I found. The more trust and integrity that I exude, the more I'm going to attract clients who have trust and integrity. Because we attract clients who are like us. I mean, that's if you are scum of the earth, you will attract clients who are scum of the earth. That's just who you're attracted to. So we have to back up the bus. We have to say, what can I be doing now? The key to developing trust is this. Does the client feel you're there for me? I see we are not on the broker's journey. We're on the client's journey. And big difference. Mm-hmm. When I see people who are so hesitant they're not a client of mine yet, so I'm not going to share with them this paper, this research finding. I mean, you know what? They're never going to become a client of yours. You've got to be willing to give. Because again, what I found is this. The higher the degree of trust, the faster decisions are made. Think about that for a moment, right? I mean, we've all been in situations where we're dealing with somebody where there just isn't a level of trust. And it's hard to get a decision made. But if there's a high degree of trust, go for it. Go for it.
Right.
Yeah.
Okay.
Yeah.
So then if you turn the corner here, in your world, you're talking more about buyers. And in my world, we're talking about investors. But in both cases, we're dealing with people that are looking at having a trust relationship with someone who might have a sales capacity, but also might have an advisory capacity. Sometimes people get paralyzed with too much information. What would you recommend to help people accelerate the decision-making process so they can overcome the paradox of choice and get down to what's really important and move with confidence in a way that is in everyone's best interest?
Yeah, I'll go back when I was about 24, 25 years of age. I was just getting established in a corporate job and I began investing. And I just became so overwhelmed with information and data as to who am I looking for to manage my very small portfolio. And I became overwhelmed. And I'll never forget, there was an unbelievable broker who came into my life and he just simplified everything. He first established trust because in the absence of trust, no decisions are made, period. So what I got to do is I got to establish trust. And there are very distinct strategies we have to do. First of all, it's sharing with them information. It's calling an ace and a spade. If this is a bad portfolio, I've got to call it out. I got to be right up front with what my fee structure is, with how this is working. I got to be right up front with, hey, I just saw this yesterday. We're in the US, we hit 3 years of a bull run in the market. That's pretty impressive. And, what comes next? Don't know. But, wait a minute, hold it. The market's going up, but gold is going up. Isn't gold normally seen as a safety? Look at crypto. Look at all these other alternative currencies. So again, I am needed now more than ever, but I've got to be able to have that conversation on their terms. This is what's key. Don't overwhelm them with your financial expertise. Don't overwhelm them. I love to say this. Just share a story. Just share a story.
I've been doing what I do for maybe longer than you've been doing what you do. I've been giving financial advice for well over 30 years. And everywhere I go, going back to the beginning when I started as a financial advisor and everything I've read dozens of books since, I say it's all about storytelling. It's all about making a connection And I certainly have to admit that I'm guilty. I think I can tell a story fairly well, but I also know that I am a person who's a bit of a technocrat and likes to sort of say, but I know what to do here, and let me show you, and then out come the numbers and out comes the logic, as opposed to just something that pulls at the heartstrings that will actually, a lot of research says that people make decisions emotionally and then justify them intellectually after the fact.
Without a doubt, without a doubt.
Yeah.
And that means we have to have 50 to 100 stories.
Oh, okay.
Because again, we may be in this situation, that story's going to work well, but that story's not going to work well with this situation. We got to be able, and got to be able to. And this is where integrity really comes into play.
Okay, so we had a 3-step process. We started with trust, and let's move on to the second step here, which is psychology and emotions. You talk a lot about emotion in sales, and I'm wondering how emotions play into decision making in wealth management, and especially how advisors can ethically show integrity to keep emotion out of the decision making as people move forward and proceed with managing their money.
That's huge. But I'll tell you what, let's not take emotion completely out. I don't like to take emotion completely out, because at the end of the day, they've got to feel good. I'll give you an example. My wife and I, we were looking to make a move in our portfolio. I told her what my advisor had said, and I said, I think we're going to go. She said, you know what? I trust you. You're far more knowledgeable than me, and I trust the person that we work with. We went ahead and pulled the trigger. Now, how did we get to that point? Because my wife has seen my level of interaction with this gentleman over the years, and my knowledge of the industry and the number of people I work with in the industry and so forth. So she had that, but it ultimately came down to emotion. She had to feel comfortable. Did she have the facts? No, she didn't have the facts. But when I made that move, I felt absolutely good. Absolutely. Because my wife was emotionally on board with me. And there have been times where we've looked to make a move, looked to make a decision. And I can tell my wife's not on board. And I've just got to slow down. I just got to say stop. And it could be the best thing in the world. But from an emotional standpoint, because at the end of the day, what's funny is rarely do we make a decision with our portfolio. Unbelievable, change the trajectory.
Right.
It's a series of decisions. I mean, we all know the value of compounding. We all know the value of just regular discipline with how we invest. That's an emotion, because what are we doing? We're calming. So I think emotion still plays a very key role, because the last thing I want is my broker I work with to get into a panic. If he were to ever call me and be in a panic, I'd be like, uh-oh, something's wrong.
Because there's mirroring, right? Because the more emotional one party is, the more likely it is that the counterparty in any kind of a discussion will feel that energy and feed off it.
Without a doubt. That's why I love it, because the gentlemen I work with in the firm, they're very good at sharing stories. They're very good at sending us information. They just stay in touch. And what's fascinating is this. Anybody who I'm working with, will say I'm an advisor and I've got clients, got investors. I want that investor to feel comfortable referring me to somebody else. That's the mark that I'm doing my job right. That is my mark. I can't tell you the number of times I've been in conversations. We all have. We've all been in conversations where somebody's complaining about their advisor, their planner, whoever, whatever term you want to put to them. And I've always felt, I feel good. And so as a result, I don't hesitate to share that person's name. Hey, I'll be happy to connect you. That's the mark of quality. I'm sure you've seen that. You said you do it.
I certainly have.
3 decades.
Can we talk about decision ownership? And, a good buyer helps the person that's making the decision feel good about the decision. And then if they own it, they're more likely to stick to it and maintain their adherence to whatever strategy was laid out in the first place. What are your thoughts on decision ownership and the importance of not only making a good decision to begin with, but being comfortable with it so that you can stick with it down the road?
Absolutely key. The decision has to be framed around the problem that we're solving or the opportunity that we're going after. That's what's key. A decision made without an understanding of what it is that we're trying to solve or what is the gain we're trying to get is going to wind up creating scared people. because people are going to second guess. And that's why it's absolutely important. If you're working with one of your investors, you've got to be explaining to them, this is why we're doing it, because again, this is going to help address it. This is going to help address that. And you've got to frame it up that way, right to the point of where you're making the move or getting the signature or whatever it is. So you may be restating that 2-3 times over the course of getting the deal to close. But that's okay. That's okay. Emotion in terms of second guessing comes into play when people go, now, why did we make that move? Why did we make that move?
Measure twice, cut once. There's no harm in reinforcing what's going on.
Yeah. I love that. I've never heard that in use in a financial setting, but yeah, I love it.
Stephen Covey, it's one of Stephen Covey's favorite phrases.
Yes.
So that's where I got it from. Okay, so 3 steps. We started with trust, and then we moved on to decision making. And let's see if we can round this out with some discipline.
Yeah.
A lot of financial advisors will say that they are behavioral coaches. And the idea of being a behavioral coach is to engage in what, for lack of better terminology, might be called constructive behavior modification, which is a psychology term that financial advisors do not like. But they will say they're a coach, but they won't say they're a modifier. But obviously, if you're coaching someone, you're coaching them to modify what they would have done had you not been coaching them. So it's maybe a bit of a semantic thing. Please offer your thoughts with regard to discipline and once you've got the plan in place, once you've built the trust and built the plan and made the recommendations, how do you follow through to make sure that you stick with it down the road?
Well, this is where it takes regular communication, and you've got to be absolutely disciplined. I run into people who have been in the business for years, and except for the annual review, they've lost sight of their clients. I want to be in touch with them on a regular basis. Now, not just, hey, how's it going? I want to be in touch with them in terms of sharing them something that they can use in their personal life. Because again, this is one of their objectives. This is one of their things. They may have this desire to buy a ranch in the Rockies. And great, see an article on real estate in the Rockies. You want to send that to them.
Yeah.
Yeah. I mean, what I found is this: the greatest investor relationships are the ones where there's an understanding of both the professional, the investment portfolio, and the personal. And when you bring those two together, but see, it all comes back to, you got to start with trust. Yeah. And this comes back to behavior modification. I'll give you a classic example. My tolerance of risk has changed dramatically over the years. When I was young, it was very aggressive risk. And then as I get older, I look, it's more of a risk prevention. There's still X over here, risk. You've got to be able to guide the client through that phase and help them understand. I see so many people making big, giant mistakes right now because they were late getting in the market, just because life got in the way.
Almost.
Suddenly a parent passes away and they're got this sum of money. And then they just want to roll the dice and go for this 10X deal. It's the TikTok theory of investing. Well, this is what somebody did on TikTok and it really worked, so it's going to work for me. Wrong again, cowboys and cowgirls.
Yeah.
It's not going to happen. Yeah. And so there is a lot of behavior modification, more than, you're right, than we ever want to admit in the business.
In fact, increasingly, a lot of people will say that a financial advisor's primary value proposition in 2025 is behavior modification, not tax optimization, not risk management, not portfolio construction, not knowing the latest details of the tax law and whatever else. It's the behavioral coaching, hopefully done with some integrity, hopefully done with some buy-in and discipline, that will actually get people to where they need to be.
It absolutely is, because now that helps me be able to deal with tax modification more intelligently, more competently. It allows me to do in terms of, what should I be in equity? Should I be in bonds? How do I balance this out? Where do I invest? It's absolutely key. So behavior modification is something we can never walk away from. Because remember, we have to remember that our clients chose us because they liked us. They saw what we were doing and our investment strategy lined up with their expectations. Now, over time, it evolves as people age, needs change. Totally understand.
So let's see if we can bring this back to where we started. We began by having you say sales is leadership and leadership is sales. Not everyone listening to this podcast will have an opportunity to have a sales role, but we can all be leaders in our communities in whatever it is we do. What resources would you recommend? What books would you recommend on the topic of leadership? Because I think leadership can morph into any number of different things in our lives, and virtually anyone can be a leader in their field if they want to be.
Yeah, that's so true. And when you're leading, you are selling. So, I mean, everybody's in a sales role. Everybody is in a leadership role. You know, a foundational book that I tell people to read is Atomic Habits by James Clear. It is amazing at the insights. And I'm going to go back. It's been out about 10 years now, but Principles by Ray Dalio. I love that book. Now, I'm not totally in line with all of Ray's doomsayer projections now. But the way he put his organization together, tremendous amount of insight for us all to learn from. Those are two books that I think anybody in our space needs to be devouring. Now, there are plenty of other books. Norman Vincent Peale, absolutely. Zig Ziglar. I mean, these are legends of the industry.
I'll offer one as well. I did graduate work in public administration, and one of my favorite books, and I read it over 30 years ago, was called Leading Change by John Kotter. Kotter's a prof at the Kennedy School at Harvard.
Yes.
And his idea is that, a lot of people in management will say, well, you have to manage change. And Kotter's view is no. If you really want your organization to change, you have to show leadership and you have to lead change, because if you wait for it to change organically, you're going to be behind the curve.
Yes.
And so you have to lead. And here are the steps that you need to take in order to get people to follow. But you need to lead, because if you don't lead, you're not going to change quickly enough. And I think that's what I'm hearing you say as well today.
That is without a doubt. I mean, Kotter, when he first wrote that book and the subsequent books, it's still just as applicable today as ever.
All right, let's see if we can close this off. This has been a fascinating discussion, and I could probably go on for a long time, and I'm sure you could. Mark, I always like to end by asking people, the podcast is called Make Better Wealth Decisions. What advice would you give to the listeners and viewers with regard to decision-making to help them make better wealth decisions?
Play the long game. Play the long game. And it's monthly contributions to your investment portfolio. If you just do those two simple things, don't think we can time the market. Don't think you're going to be smarter than everybody else out there. I had the privilege of living down the street from Warren Buffett for a number of years. No, we did not know each other. I would run into him occasionally, but no. And there's so much that I learned from Warren, going to his annual meetings and so forth. And it was just a calm demeanor. Don't get caught up. As he always said, when expression goes, but when everybody thinks everything is great, that's the time you sit on the market.
That's when you be aggressive when people are when there's blood in the streets, and be nervous when people are feeling frothy.
Yeah. And
that's a bit counterintuitive, but it's a great way to use sentiment as a barometer for valuation and risk.
It's absolutely is. And again, it comes back to just playing the long game. If we get caught up in the daily swings of the market, or even the quarterly swings, again, you're buying the fundamentals. You're investing in the fundamentals, whatever mix of assets you have. And we, as an advisor, have to help people to understand what that mix is.
Mark, I want to thank you for your time today. It's been a real pleasure. I want to wish you all the best in the future, and hopefully our paths will cross again sometime.
You got it. I appreciate it. Thanks so much.
This podcast is not to be construed as offering specific investment advice. Please consult a qualified advisor before acting. My books, Stand Up to the Financial Services Industry and Bullshift, are available online. If you'd like to meet to discuss how the topics in this podcast affect you directly, please visit my website.